up, everybody? It is Monday, November 9th. I just sent out the new edition of MMT Trader. If you want to get that, and you should, go to the link right here in the description below. So the rally continues, the post-election rally. Well, I should qualify that because NASDAQ pulled back a little bit today. So let's talk about this. You know, I told everybody before the election that there was going to be a big post-election rally. And the headlines, you know, one day it was like the blue wave is coming, the next day it was like no blue wave, so you had all the people trading the headlines. And, you know, I've been over this whole headline trading nonsense so many times. You know, that's not an approach. And actually, it affords a guy like me and, you know, my subscribers opportunities to make money, because that is, all that stuff is just people reacting emotionally. And you got to go against emotion. For me, going into the election, those considerations, blue wave, not blue wave, Trump winning, Biden winning, it was secondary, if not irrelevant. I mean, to me, the whole thing is about the fiscal flows. You know, that is the core of the analysis, and that is the driving force behind basic conditions. And I always say, you know, this is not about predicting the market. It's about predicting or understanding what are basic economic conditions. Are they conducive to, you know, rising stock prices or rising commodities or, you know, currency movements, or are they not? I mean, that is really what we're trying to figure out here. And those flows, you're talking about trillions upon trillions of dollars of spending, government spending flows. I mean, that just pushes everything, all right? Now, I will say this. Up until now, it's been pretty easy. I know for a lot of you it hasn't been easy, and I'm talking about from a market and investing context, because you keep looking for that crash. You keep looking, and you know, there's a lot of you out there, maybe experienced in the markets, maybe novices who say, well, the market is detached from reality. I mean, you hear this criticism all the time. It's just not reflecting reality. You know, we got this COVID crisis going on, and millions of people lost their jobs, and businesses are closing down, and I understand that. But that's not what the market looks at. Number one, I've tried to explain that. It's all about profits. And number two, these market averages are driven by large mega cap stocks and companies, all right? And number one, you have to understand that, because that is going to give you kind of the big picture of what the market's going to do. And number two, you have to know, you know, who is sucking up most of those spending flows. You know, the big companies. You have to know that, because you want to be concentrated in those areas. And outside of the stock market, you know, considerations as to what's going on with currencies, with Forex, what's going on with commodities. All these things are linked together. So we understand that through MMT, through the fiscal understanding, through these daily flows. And that's another thing. I'm the only one who really has this real time. Like everybody else is looking at this stuff on a 30-day, you know, in the past, or a quarter, about 3 months ago. I mean, I see this stuff real time from the information that's posted from the Treasury every single day. The other factor in here, and it's something that I've been talking about for a long time, is sentiment. Now, sentiment can give us indications as to when there's going to be market corrections, or when, you know, timing wise, it might be a good time to buy, or it might be a good time to take profits. Now, I was saying up until now, it's been easy, you know, because everybody's been negative. Everybody's been bearish. I've been talking about the weekly AAII survey. You know, that thing went 35 weeks of very, very low bullish sentiment. It only last week came up to what its historical average is, and bearish sentiment was still above its historical average. Now, I suspect in the data we see this week, we're finally going to see the bullish sentiment rise above the historical average, and we're probably going to see the bearish sentiment come down below the historical average. And I think a lot of the sentiment was really tied to the election outlook, because we started to see movement in this direction as we got closer to the election. So what I'm saying is it gets a little bit trickier now. Like before, everything was low-hanging fruit. You bought every single dip and it was just going to go up. That's how it was. And now if we get sentiment moving towards more of a bullish extreme, and maybe I shouldn't even use the word extreme. I don't think we're near there yet. But I mean, you're going to get some corrections. However, as long as the fiscal flows remain where they are, those things are going to be corrections. They're not going to be bear markets. The only time we have to really be concerned about, the market going into a bear market and fundamental conditions changing, not just with respect to stocks, but also with respect to, what's the dollar doing? What's gold doing? By the way, let me just mention gold was down. It was like a mini crash today, down almost $100. That's craziness. All right, that's not going to last. That'll come back up. I mean, we saw in the latest CFTC data that producers were buying on these dips. Swap dealers have they were buying on these dips. They were reducing their short position. I mean, these guys are savvy operators in the physical markets and the gold. You got to look at what they're doing. It's very instructive. But I'm saying that sentiment now, we're getting to the point, we'll see the numbers on Wednesday, where we could have some pullbacks. We still have all this election turmoil and things could still get crazy in terms of, who really won, certifying the vote, this and that. I'm sure it will. But those are going to be corrections unless we see some shift in policy which is going to contract or shrink or otherwise reduce the spending growth. And I don't think that's going to happen right away. I mean, I've been talking about this. I don't think that's going to happen until, January, February next year at the earliest. I mean, whoever won the election, I think it's Biden, he's got to be inaugurated. He's got to be sworn in. And then policies have to be proposed and Congress has to vote on it. And you might still have a split Congress where the Republicans control the Senate and the Democrats control the House. And that's another thing. You got a runoff election for 2 more seats in the Senate that happened January 5th. 2 seats in Georgia. I mean, that could swing the thing. So we don't know. But right now, everything stays the way it is. I'm just saying, sometimes it's like riding a bucking bronco, man. You just, woo-hoo, trying not to get thrown off. And the way you don't get thrown off is understanding what like a lot of you are going to get thrown off. You're going to get thrown off in 1 second. Maybe some of the stronger ones, you get thrown off in 2 seconds. I don't get thrown off. Yeah! Woo-hoo! I don't get thrown off. I know how to ride it. So go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Don't get thrown off. See everybody tomorrow. Bye.